Good afternoon, everyone. Um, my name is Saurabh Agarwal. I'm one of the partners at MMJC. On behalf of MMJC, I would like to welcome all of you in this panel discussion for the LODR Third Amendment. Um, Thank you all for participating in such big numbers. And this this amendment has, which was notified on 12 December, supported with a circular on 31st December, has has a far-reaching effect. I think so. After RPT provision, this amendment is one of the most talked amendment and requires lot of deliberation and summarization thereafter. And for this, I am very thankful for our panelists to take some time and to come on this particular platform to share their views on this particular subject. This amendment deserved this kind of a heavy panel. And today with us we have uh, Mr. Kumar Das from SEBI. He is a deputy general manager at SEBI. He joined SEBI in 2008 and is currently posted in corporate finance department. He is heading the policy division, which handles policy matters relating to ICDR and LODR regulations. Prior to CFD, he has worked in market regulation department and integrated surveillance department, and has experience in monitoring and supervision of MIIs and market surveillance, including enforcement related matters. He holds MCOM degree from Utkal University and MBA in finance from IIM Kozhikode. He is supported with our own beloved Rajendran sir and Apar for that matter. Thank you, gentlemen, for coming here and for being part of this panel. Uh, we also have Yukti ji, who is representing NSE. She is a seasoned financial market professional with 20 plus years of experience in capital market and banking sector. She holds chartered accountancy qualification, a DISA certification from ICA, and a Bachelor of Commerce degree. In her tenure of 17 years with NSE, she has been in various regulatory functions such as investigation, inspection and enforcement, exchange compliance, member compliance, and listing. Presently, Yukti heads the listing department of NSE, which is one of the key roles, as we know, in the regulatory group of NSE. Welcome, Yukti madam, and thank you for being here. Next, I would like to introduce our very own RC sir, Rajendra Chopra sir, one of our beloved CS member. Uh, he is an associate member of ICSI and a law graduate with over 27 years of experience in corporate sector. He is presently associated with Cipla for past over 8 years and is heading the secretarial function for the group as company secretary. He is a member of FICCI and CII Corporate Laws Committee. He is a regular speaker and at various events organized by business chambers, professional institutes, and other bodies. He is one of the most sought speaker, and getting his availability is very difficult. And he has blessed us with his presence. Thank you so much, RC, for being here, and looking forward for your contributions.
Thank you.
Last but not the least, again, one of our favorite, Makarand Joshi sir. I can go on and on, but in the context of today's panel discussion, he was part of the expert committee group which was constituted for reviewing LODR and ICDR in the context of promoting ease of doing business. This group had made more than 90 recommendations, and currently he is also a member of advisory committee of LODR, the standing committee of LODR for LODR, wherein this LODR provisions can be consistently reviewed and harmonization can take place. So thank you, sir, for being part of this panel and looking forward for your contributions. Uh, Friends, Okay, before I go into the panel discussion bit, I would ask SEBI Rajkumar Das sir to give a quick remark. And once we have his perspective, then we go into the panel discussion. Rajkumar sir, over to you.
Thank you, Saurabh. Good afternoon, all of you, and thank you, Saurabh, for giving us a wonderful introduction about SEBI and the team members here, about me and my team members. And thank you to Makarand Joshi, MMJC, and especially to Mr. Makarand Joshi and his team members for arranging this panel discussion. To be honest and to be fair, they have been following up for so many days to arrange this panel discussion, and it is because of the paucity of time and other important works that are lined up. So this has been delayed. So that's my apologies from our end. But finally, I'm happy that we were able to make it and for this panel discussion. And I hope this will be helpful for the regulator as well as for the other people who are on the other side to understand what the market thinks, and at least and the other side they should know what regulators also thinks. That I think that will bring more clarity and transparency and the process behind making all these amendments. So before getting into, I just want to make one disclaimer saying that the views that will be expressed by me or by my team members are limited to us only, and this will not represent the views of SEBI. So that is a disclaimer before going ahead. I want to make this disclaimer. So just to give before this, we'll get into the details. So I just give you a brief background how all this started, what are the process, and what is constitution of this committee, and how these amendments were finally happened or took place. So the government in its budget 2023-24, they had they have told financial regulators to have a comprehensive review of the existing regulations. So thereafter, subsequently, SEBI constituted working groups to recommend simplifications of various SEBI regulations under its ambit. So finally, we have SEBI constituted 16 working groups to look into the various SEBI regulations which are applicable to various entities regulated by SEBI, and come out with some recommendations for simplification and ease of doing business. So finally, and also we have SEBI had also gone out to various stakeholders, whereby we have sought suggestions from various stakeholders saying for ease of doing for ease reducing for ease of compliance, reducing cost of compliance. We have sought various suggestions from the public as well, from various stakeholders. So now coming to the listed entities, basically we have constituted a committee which is known as Expert Committee on LODR, that is EODB, Expert Committee on Ease of Doing Business, and that was basically, and it was one of the among the 16 working groups, which was basically constituted to focus on bringing ease of doing business and reducing the cost of compliance and simplification of the regulations for the listed entities. So this committee was basically headed by Mr. S.K. Mahanti, former whole-time member, and it was also comprising of various representatives from listed entities, industry associations, ICSI, ICI, proxy advisors, academicians, other people are also there. So finally, when we SEBI sought or invited suggestions from various stakeholders for simplifying or easing the compliance or the regulations, so we have received around, I think, 600 suggestions, approximately around 600 suggestions for both ICDR and LODR. And LODR itself was around 500, I think, which were comprehensively discussed and deliberated in the committee. And finally, we came out with various recommendations, which were then taken to the SEBI board. And SEBI board finally approved all the recommendations which were being recommended by the committee. And as Mr. Saurabh has rightly said, that some of the recommendations or some of the amendment that we have brought out in the LODR are currently are creating buzz in the market. So we're happy to see that the first time that the people have reacted to our regulations after RPT. I think we are getting that much of buzz in the market, but that in a positive we can see, because at least these are all ease of doing business. But I never expected that even after being ease of doing business, we are going to hear so much of buzz in the market. So some of the recommendations that I will say, major recommendations were the filing, ease of doing in filing and disclosures, relaxations with respect to provisions of RPT, simplifications and rationalization of reclassification of promoter, making optional publication of financial advertisement, making it optional for the listed entities, bringing in sunset clause for applicability of LODR regulations, uh, and some relaxation in the timelines for various disclosures. So that is disclosures and announcements. So I think these are some of the major, I think, amendments that we have brought out in this recent LODR amendments. And I think that will have a far-reaching impact on the listed entities going forward. And I think the market and the listed entities, and the most important one about is that elevating the position of company secretary or CS, and compliance auditor and secretarial auditor also. So I think we have SEBI had done a good job, fair, and I think has done a fair job in giving a ease of doing, bringing out this ease of doing business to the listed entities. I think I should. This is what a brief background of the recent amendments to the LODR. Going forward, my team is there to answer all the questions that that will be expected during the discussions. So now over to Saurabh.
So thank you so much for this insightful background. Very helpful. We will definitely come back to compliance officer and secretary audit subject. We will definitely like to hear you guys on that. Um, and I'm sure from 600 inputs to 90 recommendations would have not been an easy journey. And again, in the paucity of time, these 90 changes, or rather 60 changes, and discussing all 60 changes would not be feasible. Therefore, we have selected some questions for the panel for deliberation. These questions are motivated with the questions which comes to us, and which are the most talked about questions amongst the fraternity or amongst the industry. One of those is Regulation 30, Material Event Information. We would like to start with that. Um, I would definitely pose a question to one of you, and but please feel free, other panelists, please feel free to chip in wherever you think you would like to add or put place your perspective. So happy to have that kind of a conversation. So coming back to Reg 30, and this would be predominantly first to Rajendra Karthi sir. Um, this is perspective to the tax penalty, tax litigation. This this subject has been a pain, if I can use this terminology, a pain for disclosure, and there were a lot of feedbacks. There were a lot of perspectives as to which disclosure should be given when. And pursuant to this amendment, again, that there is a confusion whether this disclosure is to be given under para A or para B. What material updates or when I have to give updates for that matter. So all those questions are coming up, right? So, RC sir, what would be your perspective towards this aspect?
Okay, thank you, Saurabh, and thank you, MMJC team, for this opportunity and inviting us on the panel. I hope I'm audible to all of you, right?
Absolutely, sir. Clearly.
Okay, yeah. So if we read the tax-related disclosure requirement, this is divided in two parts before the amendment of December 12, 2024. The penalties, to our understanding, was required to be disclosed irrespective of the materiality limit under para A, subpara 20. and the tax assessment, litigation, dispute, etc., interim order, ad interim order, etc., were part of para B, subpara 8. In December 24, when SEBI amended the regulation, uh, there was a board agenda which was circulated, and SEBI explained the provision that the tax related matter, including tax demand, tax litigations, and penalties, were not warranted to be disclosed under para A, subpara 20. It was always intended that such matters should be disclosed only under para B, subpara 8. And therefore, with that interpretation, it became clear by SEBI's own understanding and by way of clarification that the matter like tax penalty doesn't need to be disclosed under para 20, which was without any materiality limit, but it is required to be disclosed along with your tax dispute assessment order, etc., under para 8, part B, para B, subpara 8. So, there is a question which I often hear from the people that because SEBI has not amended, the Schedule 3, then which means this is required to be disclosed under para 8, subpara 8, this para, para A, subpara 20, and also required to be disclosed under subpara 8 of para B. But that is not a situation. To my understanding, SEBI says they are clarifying it. They're saying it was always intended to be disclosed under para, B, subpara 8. So according to SEBI, because it was never required to be disclosed under para A20, they did not make any amendment to the regulation. And now the position they have clarified that you need to report only under para B20, B8 if it satisfies the materiality threshold. Right? So
Yes,
this is
yes.
a change which we have done. I hope I am able to answer the question.
Perfect, sir. Sir, what would be a scenario if I have made some disclosure about a penalty under para A subpara 20, and I am now there is an update on that
Understood.
context, right? So what do I do in that situation?
So I would recommend that now you consider the penalty under the amended sub-regulation. Now we were making the disclosure, we realized in the light of SEBI disclosure, SEBI board agenda paper, this was a disclosure which was probably additional disclosure by most of the listed companies, and it was not warranted under para 20, subpara 20. Now my suggestion is, if there are tax penalties, then need to be evaluated from materiality perspective. Suppose if there is a penalty on GST and there is an order of the GST on, say, TCS tax collection, wrongful tax credit, right? My suggestion is to club that matter entirety, including the penalty, and then evaluate whether the matter is material or not. If it is material, under B8, then make the disclosure. If it is not material, don't make the disclosure. If you have already made the disclosure, again evaluate whether in the changed regulation, do we need to provide continuous update on the ongoing litigation or not? If it is not required, then we can skip providing further update on those litigation matter. That is my understanding and my interpretation.
Makarand sir, if you want to add, maybe to conquer
No,
anything on
definitely. All
Sir,
aligned
one
with
thing
what Rajendra.
I would like to add.
Yeah, Raj.
Yes, sir.
For those tax litigation where it does not qualify the threshold limit, then what Mr. Rajendra said, Mr. Rajendra Chopra said that you did not have to disclose. But one thing like to add upon that you have to disclose it on quarterly basis. If it is not at that moment it is not qualifying the threshold limit, then you have to all those things, all those tax litigations have to club together and disclose it at the updates have to disclose at the quarterly levels, at the quarter.
Good point. So now we also have to see that how to disclose the tax litigation matter. If there are multiple tax litigation, we have to see if there is any correlation between the different tax litigation matters or not. If the matters have any correlation, different litigation from different financial year has correlation, then we need to club all these matter. And if such matter, cross the materiality threshold, then we need to disclose. But only one point of correction that, initial disclosure has to be made within 24 hours. From the time we realize that, yes, with the addition of additional matter in the litigation, because of high correlation, the materiality we have reached to the materiality threshold and the matter is required to be disclosed. Once we have disclosed, we have to provide update on quarterly basis into our quarterly filing. Now here also there are two views which are emerging. One view is that I need to provide update only if there is a material update. Another view is whether I have an update or not, because the quarterly filing has a column and a section. I need to list down the matter and maybe I can say no further update if there are no update. And if there is an update, then we can provide the update. I think I can see both the practices in the industry in some of the filing which have been done by the companies.
I think the reason is the word in that quarterly filing format which has come prescribed. The word is update and not material update, probably.
Correct.
That is the reason. And therefore, there is a lot of relaxation. I agree with Rajendra and Raj. One is materiality threshold, which was earlier 0 for penalty. Now it is penalty, claim, everything is clubbed to materiality threshold of 2%, 5%. That 1 lakh, 2 lakh, 1 lakh, 10 lakh is not relevant for tax. It's a major departure. Material event 24 hours, 72 hours is not available. So that
Correct.
is also one important point. Once you disclose any change which was earlier required to be disclosed, material change which was required to be disclosed in 24 hours is now every update is required to be disclosed not in 24 hours but on quarterly basis. And the fourth major departure is accumulation of opposite party for the earlier version, whereas now accumulation on correlation basis is another point. And therefore, this cumulative number opposite one party. So all tax disputes need not be compiled. Tax disputes which are correlated to each other will have to be accumulated, and accordingly the figure will have to be arrived. So major change in this. I agree.
So Makarand, there is one view, but more view which is emerging in the industry. That, the principle for para B is that information or event has to be disclosed only if material.
Correct.
Right? So the same basic principle, fundamental rule should be applied when you make the disclosure about the litigation also. And when we say litigation, it means the tax litigation also. Now, if in the original filing, it is clear that yes, if there are material tax litigation, including clubbing of the matter because of high correlation, that need to be disclosed. But they are saying if there is an update in that litigation, that also need to be disclosed only if the update is material. Because they are saying that the fundamental of para B, the fundamental principle for disclosure of para B is material development. So long as the update on ongoing litigation is not material, you may not be required to give an update even in the quarterly report. This is how, the views are emerging in the industry. But I'm hoping that industry standard forum will come up with some clarification and, there will be uniformity in the practices.
In the format which is prescribed in the circular, it appears that this is a cumulative detail. Whatever is disclosed once will have to be updated till it is closed. Because in the last column, there is the current status, whereas the first 3 columns are historical. And therefore, it appears that this is a cumulative detail, and whatever the current status is to be disclosed. So it may be WIP, it may be appeal in process.
No, so the question comes, Makarand, I need to provide the update. So the question comes is, do I need to provide the update even if there is no update, or I need to provide the update only if there is an update? That is the question which industry is, I think, struggling. But maybe we can ask other participants to share their views.
So Apar here.
Yes.
My view is that
since the regulation already says, I think regulation 30, sub-regulation 7, I think, which talks about the material updates in any information which has already been disclosed under regulation 30, that has to be also disclosed by the listed entity. So when we read it in conjunction with this regulation, along with the circular which provide the details of litigations, of the details which are supposed to be disclosed along with the disclosure of litigation, reading that in conjunction, that also specifies the events when the updates are required to be disclosed. So reading that in conjunction, only the material updates would be required to be disclosed in the quarterly filing.
Now imagine a situation, the materiality threshold is 100 crore for a listed entity. And the amount of tax litigation put together is also, say for example, 100 crore. Right? That is the value of the tax litigation. Now there is an update. In case of tax litigation, say the company get a relief or there is a clarity that, okay, through interim order, company is absolved from the additional tax liability of 20 crore. So now the litigation amount is reduced to 80 crore. Now, if I look at the company's materiality threshold, 20 crore is not material. So would I be required to make a disclosure or I am not required to make a disclosure?
This particular example is actually a material update because the penalty amount itself has reduced.
Yeah, but it hasn't crossed the materiality threshold. Material means material as defined in the law.
So that materiality, when you're first disclosing, then we use that materiality threshold. Subsequent to that, there is some discretion which is available to the company on deciding what is material update. And specifically in this example, if there is a change in the amount of penalty or amount of tax assessment, then that should be disclosed.
So good point, Apar. I think very clearly that once an event has been identified as material for disclosure, all update on that has to be provided. You don't have to evaluate it, the further development from the materiality perspective. Thank you for clarifying. I agree with you. I agree, fully agree. Yes, sir. You wanted to say something, Rajkumar ji?
No, I think the other query was that whether there should be any update or not, whether you have to disclose. So I think now that is clear. Only in case of update only you have to make the quarterly filings and you have to disclose it.
Which means if there are no update, we can, I mean, listed entities may skip providing the further, repeating the same detail.
Yes.
Yes.
Okay.
This correlation subject, I'm just taking this conversation forward. Correlation. How do we draw down this correlation? I mean, I would have different assessment years into play. If I'm talking about direct tax, if I'm talking about indirect tax, I'm talking about different regions, GST authority probably questioning me on certain subjects. And I believe correlation to a certain extent is even in the subpara 8 also predominantly. Explanation tax, as far as tax litigation, tax assessment is concerned, we have explicit mention about correlation. But in para 8, which is the main part of this circular, in that also, in a way, correlation subject has been talked about because it talks about cumulation of liability for that matter. And there has been a recent alteration, which is deletion of opposing party, this language of opposing party. So how do we draw down, or what's your view on correlation, how it can be assessed? I think so. Let's start with Makarand sir this time. What's your view on this?
No, if I was talking, Saurabh, before we started this panel discussion, whenever we are trying to interpret any SEBI amendment, we should read consultation paper and board note. And in the consultation paper and board note, there has been explicit discussion on this point that not only for tax, even for other litigations, there is a view which is emerging is that opposing party accumulation may not be relevant, but whenever the subject is related to each other, highly correlated, then we have to combine it together. So if there is a GST dispute, although the opposite party may be GST and there may be 10 disputes, but if there are 2 or 3 disputes which are relating to same subject and it which has high correlation, in the sense one impacts the other, and therefore there is a high correlation. On one subject, I am litigating with tax department for 3 years or 4 years, and that subject has a high correlation, and therefore it has to be collated, put together. We have to see the materiality and disclose. Whereas if these are various types of disputes, but with the same party, we need not compile, is what the view is emerging, and this is a departure from the earlier opposite party collation to highly correlated subjects correlation. Rajendran and Raj, would you like to comment on this?
Sir, agree with you, sir. Just one more point in addition is that correlation has to be now assessed in terms of outcome of the litigation. So whether the one outcome of one litigation will lead to the same other litigations also giving out the same outcome, then those should be accumulated for the purpose of calculation materiality.
I think I can give one example. I think just to have a more understanding and more bring more clarity in this subject. Suppose, sir, I have a listed entity. I have operations in 4 or 5 states, and I have factories or also my business operations are there, and I have the similar business operations in 4 or 5 states. So if I have a GST and I have GST litigation in all the 5 states, and all this business GST are interlinked to each other because my business operation is same. So the outcome of any one of the GST litigation will have a bearing on other cases that are also going simultaneously, whether it is past or present, going forward, if it is continuing. So the outcome of one GST litigations will have a bearing on other litigations that are going in other states also. So that is the example that I can highlight in this case, what actually the regulation is indicating, or what is the regulation means. That is the outcome of one litigation will have a bearing on the results of other litigation, similar litigations which are going in other states, and will have a. That's why you need to have a. That is a correlation that are highly correlated and will have an impact, and that's why you need to disclose it.
I think it's a very, very dynamic concept. Each company will have unique fact and circumstances, and they need to see it in the light of the fact and circumstances. The fact that opposing party has been deleted does not mean that you cannot club the transaction basis party. It is also possible, still this is possible to club on the basis of the opposing party, but then there has to be a correlation. Say, for example, if a private party file a recovery suit, file a defamation suit, file a breach of trademark suit, they will file you know how the litigation world works. They will file multiple litigation against one party just to put a pressure. Now, those matters can be clubbed together against one party also. It is possible. When it comes to the, say, for example, statutory litigation, even income tax, GST input tax credit, ITC, it can have different connotation, different situation. It can have a situation where the other party did not deposit the amount and therefore I do not have the credit available to me. It is possible that the account is not reconciled and therefore the information is not available. It is possible that the opposite party has not submitted the return. They have deposited the tax, not submitted the return. So though the matter is same, ITC input tax credit, but situations are different. Even though it is on the same matter, it will have different, it has no correlation and therefore these need to be treated separately. What Rajkumar has said is that, when the matter has high correlation, which means if outcome of one litigation is going to impact all the litigations, then that should be clubbed together. For example, suppose I claimed income tax rebate for an industrial undertaking, ATIA. I claimed the benefit and the income tax department says this benefit you cannot claim because you did not satisfy the conditions, right? That litigation goes year after year, and every year I claim the benefit, income tax department disallowed me. And I go on litigation, the litigation is pending before the Supreme Court. Once the Supreme Court decides this matter, the outcome will be uniformly available on this matter for all the assessment year. And therefore, this matter should be clubbed together.
Thank you, guys. I would now like to bring Yukti ji into this conversation. So, ma'am, we will have a departure from tax. I think so. Tax and litigation. We'll move ahead out of that. This amendment or this amendment, especially the 31st December circular, has brought one great clarity and standard formalized things that when it comes to incorporation of an entity, I as a company, I have to make a disclosure. But the moot point which is coming up is when would that disclosure be warranted? Would that be warranted at the time of me passing as a holdco passing a resolution for incorporation, or me signing the subscription page, or when the company has already been incorporated? When is this disclosure required? Yukti ji, your
Saurabh, like you mentioned that the circular covers this in detail. There are various parameters also stipulated in the circular itself, which might be required at the time of making this disclosure. While all the parameters might not be available, but it would be prudent to make the disclosure at the time when the decision is taken by the board. While we are mindful that all the parameters might not be available, so therefore the companies might resort to making the disclosure with as much information as it is available at that point in time, and making subsequent disclosures with respect to the other parameters, which will become clear as and when during the course of the transaction.
now move to SEBI, and Raj sir, or anyone can chip in. When so there is an expectation that whenever we buy stake in a company or we acquire stake in a company, we have to make a disclosure. At the first stage, it is 20%, and upon change, there is 5%. As far as further acquisition is concerned, it is pretty clear. Question often comes to us that when there is a decrease in stakeholding, say if I am going from 20 to 15% or from 25 to 20%, whether I am still required to make a disclosure within 24 hours of such dilution for that matter. Because again, the technical point which often comes to us is the definition, the explanation or the expectation of change is coming in acquisition definition and not otherwise.
Yes, so I think the regulation here is very clear that first aggregate the limit has to be seen, aggregation of 20% if you've breached, then you have to disclose, and then later on any subsequent change of 5%. So it is plus or minus 5% has to both to be disclosed. So if it is minus, then yes, only one time it will have to be disclosed, and after that no disclosure would be required. So this is to ensure that your shareholders and your investors are aware that whether you are acquiring more into that company or acquiring you are taking your control out of that company, so that information would be helpful to them.
Clear, understood. Thank you, Apar, for this. We move now from Reg 30. We now touch another subject again, which is one of the most top subject is compliance officer and one level below the board. RC sir is already smiling. uh, Before we put this question to everyone, let's hear from the horse's mouth for that matter. What's SEBI's view or intent behind making this amendment, and whether we have received any response from the industry on this subject? Sir, over to you.
In this, I think in this particular matter, we'll say, okay, let's hear from the from other side. Then we'll
I think that will be better, sir.
then we can open our secrets.
So, Makarand sir, Rashi sir, whoever wants to go first, Yukti ji, if you want to go first. Floor is open. Makarand sir, you want to start?
Yeah,
I think
don't
no one
mind.
wants to address this, I think so.
No, this is a major change in position of compliance officer in review. There are 2, 3 words which are used in LODR and Companies Act from the context of company secretary and compliance officer. Although I'm using this word synonym, but those are not synonym. Company secretary under Companies Act and compliance officer under LODR is little different. But still, both are necessarily company secretaries. And with this amendment, this compliance officer also needs to be company's compliance officer under LODR also needs to be KMP, and therefore there is high correlation in this. Everywhere else earlier, the wording was reporting. So in 205, it was about reporting to uh, board of directors about the compliance status of Companies Act rules, regulation, and all other applicable rules. Even in LODR under 6.2, there was a reference of reporting to some extent, reporting about applicable regulatory requirements, and therefore the word reporting to the board is very, very clear about the compliance. The addition which has come now is the word level, and word level is used in a couple of occasions in LODR earlier. Word level is coming in the senior management position where they say one level below the board, or even under composition of board of director, there's the reference of level. And therefore, what is level and reporting is not same. Need not be same. I'm saying that it need not be same. Somebody may be reporting to the board, but may not be at one level below the board. And somebody may be reporting, and reporting also has many connotations: dotted line reporting or direct reporting, administrative reporting or functional reporting, and so on and so forth. So many organizations may have multiple reporting structures. So he may be reporting to CFO, he may be reporting to chief legal or general counsel. And again, I would urge that if we refer to the board note and the expert committee report, it is very clearly coming out that compliance officer has a lot of accountability and responsibility and liability, and SEBI feels that he has to have enough authority. 2 references are coming in board note and consultation paper is compliance officer cannot be at a lower level officer because otherwise he will not be able to influence, and he should not be reporting to any other KMP or senior management. Otherwise, he will not be able to report. So these 2 parameters, which we have to remember, that he should not be a lower level officer and he should not be reporting to any other person. He should be reporting to the board of directors. Now, obviously, for administrative purposes, for his leave-related subjects or recruitment-related subject, he may have to enroll many people, and his appraisal may be done by 360-degree analysis, and therefore these are different parameters. But as far as this regulation 6 amendment, in my view, it is just not about reporting. Obviously, he has to report to the board level person, and therefore he may be one of the board members. When I say that he will report to board, means to whom? To the chairman, to the managing director, to whom? So he would be reporting to maybe managing director who is at a board level, but he reports to the board, and he cannot be at lower level. He cannot be reporting to anyone else, is what the consultation paper and board notice telling us, is my take. And therefore, there is a clear-cut authority elevation and different positioning from the regulator, and our fraternity will definitely reciprocate to it, is my take.
I agree with what Makarand sir mentioned. So the idea is to bring in the necessary authority and the access to the board, so that the matter of compliance related matters, matter of importance can be escalated as and when the need be, and the board can be kept in a loop and made aware of what all needs to be done in such matters.
See, sir, you want to chip in now? So you're on mute. RC sir, you're on mute.
Okay, sorry. I was saying that this is a very tricky issue. This was a simple provision which has been interpreted more than any other regulation in this section. And people are now having all innovative ideas, whether functional reporting can go to somebody else, MD, and administrative can go to, say, GC or CFO or some other officer or a whole-time director. Whether for the purpose of listing regulation 6, the reporting can go to one person, and for other purposes can reporting go to this. I think industry is now, more pressurized to find a gateway to bypass this provision. So enforcement is very, very critical here. People will tend to bypass the intent of the regulation, but if SEBI believe that this is something which need to be implemented, enforcement need to be much more stronger through clarity. I don't know if they will come up with the clarity or not, but there are enough innovative interpretation in the industry, and everybody will say that we are compliant of Regulation 6. Those who are dividing the reporting under company law will say this is compliant. Those whose company secretary report to the board, they will also say we are compliant. So everybody will say compliant. But important is, can we enforce the regulation in the spirit or not? So it all depends on the enforcement. Otherwise, it will just be reduced to some tick box compliance in the industry.
I hope this doesn't happen soon.
This doesn't happen, correct.
Before I request Raj sir to give his views, so just a moment, I will make the people wait for a few moments, and I will ask the panelists once again one more question. That often company secretaries comes to us and they ask that internal designation, when we talk about level, do I need to also elevate my internal designation for that matter? Is one question which is coming out. And uh, this is somewhere, it is also from a very genuine context about authority, because it's not just it's not about money or designation for that matter. It's about the authority which they talk about, that when the intent is about authority, I need to be at a particular position within the organization, which the position itself gives that kind of an authority or a command to my role. So what's your views on that? And then we go to Ratsa for that matter. But if Ratsa wants to start, we can do that. Open to you guys.
Maybe I'll take this question, sir.
Arey wah.
I think
Yes.
this has been the elephant in the room, and we have, I mean, all of them have been discussing about amendment to Regulation 6, even though there have been 90 odd other amendments. I think the biggest question which the industry had was on this Regulation 6. And it is also sometimes when we think about this, it's like, I mean, we are also astonished, like if people can take multiple interpretations on this provision, why not on other provisions like Reg 30 and Regulation 23, so that there is no need for any additional standards or guidance to the industry. I mean, we hear both the views, sir. I mean, on one side, people are saying that there is no need to elevate the position of the compliance officer, only the reporting has to be changed. On the other side, there has been a view that no, the position of the compliance officer also has to be elevated, and it's not just about reporting directly to the board of directors. I think maybe here it's important to step back and then look at the expert committee recommendation, where it had in detail discussed what was the suggestion received and what is its recommendation along with the rationale. So the discussion in the expert committee was that LODR, Companies Act, and even other laws also place a lot of responsibilities on the compliance officer, and they are accountable also if there is any non-compliance. But whereas when it comes to the power and the authority to get the information and then ensure proper compliance, that is where the regulations have been silent and the laws have been silent, but they expect the responsibility and accountability from the compliance officer. I think in that context, the committee recommended that the compliance officer should be designated as a key managerial personnel. And then in the amendment, it was said that cannot be more than one level below the board of directors. I think here also we need to take reference from Companies Act, where they have defined KMP under Section 2, Clause 51, where they have given the power to the board of directors to designate any other person other than those who have already been mentioned as KMP. But the persons who are designated by the board cannot be more than one level below the board of directors. So it's explicitly mentioned in the Companies Act that, or you can take an interpretation also that any KMP cannot be more than one level below the board of directors. And if company secretary is a deemed KMP, obviously our understanding till now was that they are also a KMP who are at the CXO level, that is one level below the board of directors. But we were surprised to know that in some companies they are 3 levels below, 5 levels below, 6 levels. I mean, I don't know what is the lowest point. I mean, where a company secretary is. I mean, it has been, at least to the extent we have interacted with people, some companies do have a compliance officer who are 5 levels below the board of directors. So in that context, it was a conscious decision and a recommendation by the committee that you need to have compliance officer designated as a KMP and cannot be more than one level below the board of directors. And our understanding has been very clear, but I think industry has a different understanding. And I think, as RC sir said, there are also different ways of implementation of this particular provision. Businesses have a lot of designations. Some companies have vice president, senior vice president, group vice presidents, etc. But then the regulation and laws recognizes certain people like compliance officer, CFO, because apart from the board of directors, these people are very responsible for ensuring good governance in a particular company. So if companies are not ready to place them in CXO positions, I think then it's something which is like very worrisome for a regulator. So we sincerely hope that the listed entities and the market participants do implement this particular provision in both letter and spirit, which is like discussed a lot in other provisions.
To add what Rajendran has said, and I will say कि already Mr. Rajendra Chopra has spoken my mind also, saying that this regulation is very clear, simple, and written in very simple language, very simple English. There are so many regulations in the LODR which are more complicated than these regulations, but there is no buzz in the among the listed entities, and they are able to implement it without any sound, any buzz. But for this, which is very clear and written in very simple language, that one level below the director, you have to be a KMP, you have to be an employee. I don't think, and they should understand what is the spirit or what is the intention behind this amendment. And they should listed entities should implement it in the spirit and in letter. The reason that we have elevated or have brought this amendment, saying that till now, so far before this amendment has come into picture, all this compliance officer used to be a junior level employee, maybe 2 level, 3 level, 4 level, depending upon the company's organization structure they used to be. Now, when they are given lot of responsibilities, lot of accountabilities without sufficient power and concern for us, that how are they going to discharge their duties efficiently and in a more independently and more without being biased, how they're going to discharge their duties. That is the reason, that is the intention that we have elevated this position, and we have brought to this position where they can discharge their duties in a more authoritative manner, they'll be more empowered to comply to all the regulations, so that the position and or the reporting structure should not be a hurdle for them to be in compliance with the LODR regulations for a listed for which they have been interested upon. So they should, all the listed entities should understand the spirit or the intention of the regulator of bringing such regulation. And I don't think there is any iota of doubt in the regulation or any ambiguity in the regulation. Just because, as Mr. Rajendra Chopra has said, that people are interpreting not just to avoid or to take a easy route or whichever suitable to them, they're taking that interpretations and don't want to implement or to follow the regulations in letter and spirit. So I think that is also a duty or responsibility comes to the secretarial auditor, where they have to see whether these regulations or this amendment have been effectively and have been implemented by the listed entity later in spirit. I think that is the another second next forward. We're looking for the secretarial auditor for whom also we have brought amendment and have them in. And the next responsibility is to look that it has all been implemented by the listed entity at the end effectively.
Thank you, Raj and Rajendra. You have been so clear and unambiguous. I think this one part should settle this dust forever as far as this subject is concerned.
And that's why, sir, I'll request all the listed entities also, if they are attending, rather than taking a shot or trying to I think they should understand what this regulation wants to offer.
Beautiful. Thanks. This required clarification. I'll move ahead. I don't think out and when we will be relieved from this SHP filing for that matter.
So we've been closely working with the depositories, as all of us know that there is dependency on all MIIs for collating this information directly and disseminating. So we've been working closely with them, and the SDD disclosures are expected to go live in phased manner. In the first phase, we are targeting the companies whose complete shareholding is in demat form, and accordingly we are working on the September and December disclosures. So we've both the exchanges have already started disseminating the disclosures that we are receiving from depositories on our website, although this is really right now a beta phase dissemination, because there are certain barriers that we still need to cross. But nevertheless, the work is going on in this direction, and we hope that this will progress in near future, and we will see that a lot of more companies will come in this ambit gradually.
So, with respect to financial results, I know this, we believe that the law is very clear, but still would like to understand your perspective, Yukti madam. With respect to financial results, is QR code mandatory and the financial results an optional item, or what's the situation? Is QR code optional for that matter?
So my understanding is that the regulation has now made QR code mandatory, and the QR code will then lead to the detailed disclosure on the company website, where the shareholders can access the financial information seamlessly. The regulation 47 clearly stipulates that there needs to be a QR code disclosed with the advertisement that they publish.
Correct. Fair enough. Last question to you, and then we will jump to another topic, is on the reclassification of promoter group public. Earlier, it was an approval mechanism, and now there is a departure to a NOC-based approach. Just for our viewers, for the fraternity, if you can just throw some light as to what is the difference between both these approaches, if you can throw your perspective.
So the amendment has brought in a lot of clarity in terms of how the flow will be. Earlier, the companies used to get the shareholders' approval, and thereafter they approached the exchange, where the exchange used to examine the application, and if they were not meeting the criteria stipulated in 31A, then the exchange would not be able to proceed. Or if there were certain requirements that exchange posed, and the company would then needed to go back, comply with those requirements, and come back for exchange approval. This process sometimes used to take a lot of time, whereas now the stipulation is that once the board approves the application, the NOC application will be made to the exchanges. Exchange will grant NOC within 30 days, and thereafter the company will go to the shareholders, which will grant the final approval for the reclassification. This will not only shorten the process, but structure wise also it is very clear, because after the shareholders approval, there is no other regulatory requirement left, and it can be directly implemented. So the exchange approval also has a timeline now, which is 30 days as stipulated by the regulation itself. I suppose the process will now become more streamlined in terms of the flow and the timeline.
Actually, this is a good initiative. We spent a lot of time on this because there were in some companies, in some promoters, they were raising a concern that in spite of a genuine case, board is not acting on those requests and not proceeding further. So with this revised framework, there is a mandate even on the board of directors and shorten the process. So it gives some safeguard because now we all know that because of the demat freezing, there are a lot of promoters, people who are classified as promoter, but actually they are not promoters. They want to get themselves reclassified, and that process will also get streamlined with this new framework is may take.
We may move to another subject, and I think so. Hopefully this will be a
Just,
simple one. Yes, sir. Ashish, sir.
Just one point on 47, you asked a question, and I think it is important to clarify that point. The question was if, and this is a question, or you can say a confusion in the industry, many people must have called you also, that if we are publishing QR code, it is fine. But if some companies voluntarily decide to publish the results or extract of the result in the format, is it mandatory for them to additionally provide the QR code in the advertisement? Because the law says QR code is mandatory, but nothing stops the company from publicizing. And the confusion is whether both has to be provided in case the company decide. If, again, like Makarand says, we read the agenda, board agenda of SEBI, it makes very clear that the intent is to give an option to the companies that either you publish the result or you publish the QR code through which the people can access the result. So it's not that if the companies are publishing the result, then QR code also has to be published or advertised in the newspaper along with the result. That was just a clarification. I thought it's important.
No, but we were, at least our understanding is that QR code is mandatory. What is optional is publishing the extract of the results. So QR code has to be there even if the abridged version of results are published in the newspaper.
So, sir,
This
if
is
we
the
read
regulation.
the SEBI regulations, if read the agenda, it says we are providing an option to the companies to publish QR code.
But the regulation now says that QR code is mandatory. Financial result is optional. So
Correct,
if
sir.
you want to come out with full financial result, but QR code is mandatory.
Correct.
Otherwise, there is a risk, Rajendra, that some people may selectively publish some numbers which are convenient and not give the full details because they will publish QR code in one and some selectively some numbers. That also can create some problem. So QR code is mandatory.
Okay.
Correct, sir. That is our understanding also.
Fair point. Fair point.
We move ahead and we go to Regulation 5. I think so, fully simplest of the lot. Regulation 5 was always there. Proviso has been added wherein disclosure is expected from key stakeholders. First, to SEBI team, if is there any new responsibility which has been casted on the listed entity? Is the question which is coming up, or is this predominantly for the stakeholders to take care of?
The background to the, maybe I can give a perspective about the reason why we brought in this proviso. In LODR under Regulation 5, there is an obligation on the listed entity to ensure that its promoters, directors, or KMP, or any other person who are dealing with the company, they comply with the obligations which are listed down in the LODR regulations. And we have come across certain instances where we have observed that there have been some mistakes in the shareholding pattern filed by the company or some disclosures made by the company. When we have reached out to them, we were given to understand that it was because that particular individual or the particular entity did not give that information, and that is the reason which has led to this incorrect disclosure. So here there are two aspects to it. The first aspect is it's the responsibility of the listed entity to ensure appropriate disclosures and then correct disclosures. But we also realize that we should also place an obligation on the people who are dealing with the listed entity, including its directors, KMPs, promoters, to give all the information which is required for the company to ensure compliance. If the first leg of it is not available, then the second leg of it, which is the disclosure to the investors and the shareholders, that may not be possible. I mean, accurate disclosure may not be possible, and that is the reason this proviso was added. As far as any obligation on the listed entity is concerned, I don't think there is any new obligation on the listed entity. However, it is the responsibility of the listed entity and the compliance officer to bring in awareness and educate the people who are dealing with the listed entity that these are our compliance requirements, and we need information from you about your relatives, about entities in which you have interest or concern, so that we can identify whatever is required under the regulation, be it promoter group or related parties, so as to ensure that they comply with all applicable provisions. I mean, this is the background. There is no new obligation, but then the responsibility to educate and then make them aware of these provisions is with the listed entity and the compliance officer.
See, sir, what mechanisms would you suggest for this expectation from compliance officer?
Yes, so what? So first of all, this is actually a very good provision. Otherwise, if you see some of the disclosure, and we used to wonder, and I have read some of the disclosure of listed entity will say, so SEBI asked for, sorry, stock exchanges asked for a clarification. There is a rumor or a news in the media, and the companies will say, we have no information on this particular, development, and therefore we cannot comment on that. Whereas the information pertain to either promoter or one of the director or somebody who is very related to the company. So, the qualitatively this will improve the quality of the disclosure, I would say. So a welcome provision for this. What we are doing is, for the company, promoter, etc., we have a code of conduct. So we are incorporating a clause in the code of conduct that it is mandatory for everybody whomsoever this code apply to ensure that if there is anything which is relevant for the company to ensure compliance of any statutory provision, they have to provide that information to the right people, or if they can't identify, then the chief of the compliance or CFO or CS. So this is how we are doing this. Second is we are sending a customized communication. In fact, some we have sent and some we are in process to the different category of people, targeting, giving the example of the event which can require them to provide an update to the company at a right time. Say, for example, in case of promoters, it can be any stake sale or purchase. It can be any family arrangement. It can be any voting arrangement, or the control and management of the company, right? If there's anything relating to the company, they should at a right time disclose it, because there are disclosure obligations. And it is possible that they may not want to discuss it with the company, but then they should be guided by appropriate experts on the subject. When it comes to the board of director or independent director, we are requesting them to provide all the disclosure regarding their directorships, their interest in other entity, related party, relatives, trading in the shares, etc., so that we can ensure compliance of the relevant regulation. When it comes to the company employee, we are explaining them that you should disclose all material event. It can be on the litigation, it can be on the production, it can be on the disruption, it can be on the strike, it can be on the joining, resignation of senior management. Anything which can require a disclosure or a compliance, insider trading is one. All those need to be reported to us. We are giving this exemplary list. This is too early. We are evolving this, and we will keep evolving and updating this list. But this is how we are trying to comply with the provision.
So completely in sync, sir, because this is not the first time, as you rightly mentioned, that uh, the expectation from relevant employee, the expectation from DPs, the expectation from promoter, director, KMP, SMP to chip in for compliance is not new. It is something which has been need of the time, and therefore time and again this ask has been encrypted in the listing regulations. And now I think so with this uh, amendment, that's the final nail which is being hit to ensure that it is now their prime responsibility. We have been talking about this amendment, and we have been receiving questions. We have couple of unique questions which have come to us, and therefore we are at more liberty to spend more 5-7 minutes on this discussion, and then we take those couple of questions. I would draw your attention towards secretarial auditor amendment which has come in, and again would want to understand from SEBI as to what should be the key parameters which should be considered by uh, by uh, by the company or by the audit committee for that matter for appointing a secretarial auditor, and will a long-standing affiliation have any effect as on date now when this amendment has come? Would have any impact? What's SEBI's view on this particular subject?
Think initially Raj sir said that this panel discussion got delayed and it was, I mean, apologies from his side. I think now that the consultation paper on disclosure of minimum information is out, I think our job becomes very easy. What has to be considered by the listed entity is the minimum information which has been prescribed in that consultation based on the recommendations of ACLOD. I think it depends on company to company and the requirements, but a basic check by a board of directors or by the company would mean that what are the credentials of the secretarial auditor, the companies in which he or she is currently the secretarial auditor or is providing services. And with respect to the listed entity, is there any conflict of interest? Because that is one of the things which a company should be careful and ensure that whoever is being appointed as the secretarial auditor doesn't have any conflict of interest. And obviously, remuneration and all those things will be decision of the board of directors. And when it comes to shareholders, they will also be looking at what is the independence of the secretarial auditor, credentials of the secretarial auditor, and what are the views of board of directors while they are recommending to the shareholders. As far as affiliation of the secretarial auditor with the listed entity is concerned, the amendment has a grandfathering clause which says that whatever has been the previous association before March 2025, that will not be counted for the purpose of the tenure of the secretarial auditor, be it 5 years for an individual or 10 years for a firm. So to that extent, there is no issue. But obviously, it will be left to the judgment of the board of directors whether they would want to continue with the same firm or the same individual, or they would want to go for a fresh firm or an individual for the appointment, which is like for the next 5 years after this grandfathering gets over. But as far as the regulatory provision is concerned, it's safe. I mean, grandfathering is there, so previous associations are not considered. But it will be obviously up to the board of directors to take a call on whether they would want to continue that particular individual or firm, or they would want to go for a new secretarial auditor.
Ashish sir, would any perspective you would like to
No,
share?
in fact, like Rajkumar sir said, the life is easy because they have recently, I think on 7th of February only, they released a consultation paper. I think if I were to run this process for a company and identify a secretarial auditor, uh, beside the standard checklist like their experience, etc., I will also see that, how many years of audit they have done, how many listed companies they have already audited. Is there any disciplinary action or any controversy on the qualitative aspect? What is their audit approach? How do they design their audit program? Right? Do they have an ability to audit on the digital platform, or on like SAP or softwares? Because many of the information will be available in that, and they should have a competence to audit this. Their knowledge and expertise, the way they interpret the law, do they take an extremely conservative view? Do they take a very, very aggressive view? Do they take a balanced approach? Right? I think these are the things which I would consider in addition to the standard checklist which SEBI has provided. And in fact, this is a very evolved process. We companies have already been appointing statutory auditors, which goes through the process. We will adopt many of those features for the selection process.
So, super. Last question for this discussion, and I will go to Makarand sir now. There is a concept of exclusion of services which secretarial auditor cannot provide. Management services is one mention, which is a gray area or something which needs to be interpreted in greater length. One question is, what is the perspective? What's your version of this definition of management services? What would it encompass? To overall, as a secretarial auditor or as a PCS, uh, how has this amendment influenced the vision and strategic approach for the CSF, for the CSF fraternity, for that matter? These two questions to you, sir.
I think definitely it's a great recognition, and our immediate past president, B. Narasimhan, requires a huge compliment. He has been pursuing this subject for very long, and we could see that coming as a recognition from SEBI. It's a great honor for our institute and members, and we have to make all of our effort to occupy that space gracefully. It's a lot of responsibility which is shouldered on us, and definitely, when I started practice RC, I had asked this question to one of my supplier who is my software developer. I asked him that you are also professional, I am also professional, doctor is also professional. Why your profession has grown so much? So he told me one thing, that how much your profession will grow will depend on who is your customer. And now my customer has changed from just a management to the audit committee, board, and shareholder. And therefore, at a practicing level, the customer, because he is going to approve the appointment as such, is going to take shareholder approval. And therefore, it's a great elevation is what I consider from the context of course, the parameters which Rajendra mentioned, RC mentioned, these are very, very important, and therefore profiling of company secretaries will have to be done that way, whereby you will be able to deliver. It will require a lot of scale, it will require a lot of technology, it will require a lot of interpersonal skills, it will require a lot of understanding about processes, it will require thorough understanding about how to interpret a particular law. So it requires huge investment, and it is also will probably. I was talking to a few company secretaries yesterday, and the overall consensus is building that now we have to come together and form bigger organizations so that we are able to cope up and deliver this role, which is useful. The minimum data which is coming, and now an audit committee is going to consider the appointment, and therefore interaction with audit committee will increase. Probably every company may ask us to present to audit committee, and therefore what data should go to them from this audit. You cannot tell that this form was filed late or that register was updated late. You cannot say that. You have to talk from their context. You have to talk about risk. You have to talk about the process. You have to talk about adequacy. You have to talk about a lot of different aspects which may be relevant at a board level. And therefore, it's a great positioning which we have to. Oh, as far as management services is concerned, our institute, ICSI, will come out with a document. But if we take a clue from ICAI, what they say is whatever a management is expected to do is management service. So whatever is management not expected to do, that services a company secretary can render, and they have provided threats, which is very good guidance. One is, for example, self-interest test or self-review test. So I am only reviewing and I am only giving that document to the company. So internal audit, concurrent audit, or internal certifications taken by the company for their own consumption. That will not be allowed. Or advocacy, if you are appearing for the clients, definitely those are management services, and which a management is expected to do. And therefore, a practicing company secretary who is proposing to get himself appointed as a secretarial auditor should not do this. And if he does it, then he vacates, because he is then disqualified to continue as auditor. So this is this one I think we have to be very careful about.
Super. Very helpful, sir. We now go to the last round, which is Q&A round. But looking into the question, I think so we cannot ease out. One question which is coming up, and probably this is for RC sir. I would be grateful if you could explain who falls under a sectoral regulator, along with an example.
See, okay, sectorial regulator is, it depends on company to company. If I am a banking sector, then RBI is my sectorial regulator. If I am a mutual fund, then SEBI can be my sectorial regulator. If I'm a pharma company, NPPA can be one of my regulator. If I'm a telecom company, Department of Telecommunication can be my sectorial regulator. So it depends on company to company. I can't have a tailor-made one list of sectorial regulator.
Sir, I'm just taking this question ahead. There is terminology of enforcement agency also, which has been used. There is often question comes to our desk as to what do we constitute an enforcement agency and what not. Any perspective which you would like to share on this?
So yeah, good question actually. Some of the people, when I interact, the view was that even MCA is an enforcement agency because they enforce the provisions of the Companies Act, and SEBI is an enforcement agency because they also enforce the provisions of LODR. To my understanding, enforcement agency means the central enforcement agencies, which are like CBI, IB, State Police Department, and Enforcement Directorate. I don't have the list readily available, but these are the four major agencies which I will qualify as a enforcement agency. And if there is any similar, authority or agency, then I will qualify them as an enforcement agency.
Next question, and probably the final question for the day, is on RPT. And Makarand sir, I would draw your attention on this. The amendment to Regulation 23 states that the payment of remuneration to director, KMP, SMP, who are not part of promoter group and where such payment is not material, does not need to be approved by audit committee in advance. However, Section 177 states that all transactions with related parties, as per 276, require approval of audit committee. Does this mean that listed entities are still required to obtain audit committee approval, excluding the exemption provided under 23(9)?
So this is a good initiative which SEBI has taken, and probably MCA will follow the path on a lot of relaxation which SEBI has done. And as a part of the committee, we also made a lot of representations to MCA. So probably that will come. But this amendment will definitely help whenever you have your SMPs acting as directors on your subsidiary board. And because of the revised avatar of related party transaction, where related parties of a subsidiary and transaction with, so remuneration paid to those SMPs by holding listed company. But because they are on the board of subsidiary, those transactions require audit committee approval. Those transactions require, disclosure. All that will at least get eliminated, and it will, because it is going through NRC, and therefore, and NRC also has an equivalent composition of 2/3 being independent. One committee consisting of 2/3 independent director is approving, and therefore duplication can be avoided. At least to that extent, approval and disclosure both, can did not go to the public. And this was an ask from many conglomerates and many large companies who have many subsidiaries, because their SMPs used to be on the board of these subsidiaries. So that will be a good relief for sure.
last question, probably to Yukti madam. Once the SHP has been made SDD compliant, how does one add or remove promoters in promoter group? So once
yeah, sorry, go ahead.
no, so once I guess the question is that once it gets automated and companies are not required to file SHP, then how does one alter the promoter group list?
No, see, some confirmation from the company side will be required on this aspect as well, because even if it comes directly from depositories, company is the owner of this information, and apart from them, nobody else can, tell who all are their promoters. So if anybody needs to be added to the promoters, there will have to be mechanism built where the company will have to give such clarification either to the depositories or to the exchanges. These are the modalities actually which are getting worked upon now while we are contemplating going fully on the system driven disclosure.
Thank you so much for this. I think so. We have come to a end.
There is
for
one
this.
hand which is raised among the attendees. I don't know if you can unmute or you can check with them.
Mhm. Who? Okay,
Rajesh,
Rajesh. Yes,
There
we have.
there were many questions on tax. I'm seeing that, which we elaborately discussed.
Set to the pro.
Avadhish,
Hi, sir. Yeah. Hi, good afternoon, sir. Avdesh this side. Sir, I have a question. Of course, it is pertains to tax litigation only. So, a lot of, our clients have come up with a query that what includes, basically they are very, still deliberating on the amount that we need to report to the stock exchange. Whether that the litigation, whether the amount of additional fines, tax, and some additional, monetary penalty or some additional levies will also be disclosed, or only substantive penalty which is being sort of pronounced by the authority, only that would be reported. Some additional,
your question is on para A20 or para B8?
Sir, it is para A20.
A20, okay. So your question is whether we need to disclose on the material penalties or we need to disclose all penalties. Is that the question?
So for example, as on date, the board is not able to assess that what would be the quantum of the entire, monetary implication on the company. For example, certain
monetary implication of what?
Monetary, for example, there are some other levies that may be come up at a later stage that may accumulate with the order. That could be in
under
terms
para
of
8 of this.
Yes.
Under para A20, the requirement is simple. The moment company receive any penalty notice or any fine payment notice from the regulatory authorities, it can be central government, state government, etc. They need to disclose. And the materiality threshold is 1 lakh or 10 lakh rupees, depending on whether it is sectorial or not.
Avadhish, and unless and until there is a dispute, or unless and until, so for example, even if there is a tax penalty on particular financial year, but for subsequent financial years, if there is no dispute, there is no demand, there is no penalty, there is nothing, then that apprehension need not be covered, because there is nothing like that which is already subsisting. You have to accumulate only when there is a correlated dispute. Apprehended dispute need not be collated.
Understood. Thank you.
Yeah. Yes, Naval, you have raised hand.
Naval, you will have to unmute yourself. Rajesh ji, you can also unmute yourself and pose your question.
Hi, Rajesh Vada this side. Can you hear me?
Yes, sir.
Yes,
This is regarding retirement age of a company secretary. Why not to mention in the LODR? Because institute is not doing anything. And you have seen number of guys I can name them, but would not like to take them. Even beyond 65 years of age, they would like to continue, and they create the environment in the organization such that the person who has joined to succeed them, he has to go.
Question is to SEBI.
Yeah. Why not to prescribe the age limit for company secretaries too? Because for independent directors, for all-time directors, if age limit is there, for company secretaries also age limit should be there.
The only difference is for the directors, I think you can still go ahead with shareholders' approval. I think this is we are the wrong people to answer this question. I think whether they want to have a retirement age or not, it depends on the company. I
So
think
retirement is they're having it, but those guys will continue and occupy the position of company secretaries.
Rajesh, it's a matter of succession policy, and probably
then tomorrow there will be request. Then why don't you prescribe a retirement age for KMP senior management also?
Of course, it has to be there.
So I think it is beyond our limit, beyond our purview to say anything on that.
And Rajesh, this can be one of the matters.
No, not one of the. I can name those.
No, don't name.
Let's leave it.
Yeah. Thanks, Rajesh.
Take care. Bye.
Yeah. Naval, you have query? I think we are not able to. Saurabh, over to you.
Yeah. Thank you so much, our panel members, esteemed panel members, for for openly sharing your perspectives. And I'm sure all the participants would be deeply benefited, greatly benefited from your perspectives, and would have happy time complying with the provisions of the specifications under the listing regulations. Thank you once again. And before I close, I would also like to specifically thank a few of our internal team members. One is Aarti Ahuja, one is our R&D team, Yukti Joshi madam and Vallabh Joshi for that matter, Yashika Dharamshi. We have a good team here who has helped us to come out with this panel discussion. So thanks to all of them as well. And thank you, panelists, once again for joining and sharing your perspectives.
Very well.
Thank you so much.
Thank
guys.
you.
Thank you.
Thank you. It was an
Thank you.
interesting discussion. Thank you.
Thank you.